How's everyone doing this morning? There was a few late ones at the bar last night. Alex and I ended up being, I think, the very last people.
Yeah.
So we'll see how fresh we are this morning.
Doing good.
So yeah, this is a fun one. We've touched on a couple of these themes over the past couple of days, but we're going to kind of dive in a little bit more this morning. So let's just kind of get right to it. But I just want to say just a couple quick notes. I mean, so you've got basically the scale lead ag with Loan Depot integrated with a retail platform, right? So from a relevance perspective, and then Alex was somebody who, when I was talking to Joe about this, I had said Mortgage Research Center is very much named like a laboratory because it kind of is a laboratory, and it's quiet, and not a lot of people know about it, but just to kind of underline what Tony just said, I mean, just to name a couple names, they do scale lead ag for companies, and then they also have a whole network of sites on their own, but a little company called Realtor.com is powered by Mortgage Research Center, Homes.com, Moboto, and then a whole network of their own sites. So in terms of relevance, I think we're really strong this morning, so I'm super excited. So
me too.
Let's roll. So we're just going to do this setup on customer expectations, right? So this is just a couple notes from Google.
I love this slide.
Yeah. So in 2008, don't get in a car with strangers. Don't meet people from the internet right now. Literally summon strangers from the internet and get in their car within 5 minutes and be pissed if they're late, right? So I experienced that twice last night. So, but here's the more interesting thing, and forgive me, the source on this slide is Google, not Realtor. I apologize for that. But the three traits that Google defines today's consumer: curious, impatient, demanding. So in the last 2 years, this is all based off of mobile search from Google statistics. 80% more like best mortgage provider searched in the last 2 years. On the impatient side, 3 times more mortgage near me in the last 2 years. And then the most important one, the demanding one, 150% more mortgage provider near me right now in the last 2 years. So I want to spend a second on this and getting some opinions, because this kind of goes to more of a direct model of grabbing a customer, but that last one to me very much also goes to local,
Totally.
right?
Yeah, do you want to kick this off?
Yeah, sure. I mean, we definitely see tons and tons of search volume similarly, and then when leads are going, how quickly you're hitting your leads, and in general, online leads, what that follow-up process is like. You can get that lead exclusively, and it doesn't need to be 2 seconds, but it still needs to be like 2 minutes.
Yeah.
And they expect that call, and that's when they're available. They're online, they're filling out your form, they're available that moment. So you have to have some way to get a hold of the customers on their terms, not necessarily on your loan officer's terms.
Yeah, for sure. And I also think that there's, in my world, like I oversee the retail marketing and sales org, and I work really closely with our direct partners. And what we're finding is that if we can actually like get them at that demanding stage, and we can build up the reputation management for the organic level, either whether it be Zillow or Facebook or or Google reviews or whatever that happens to be for the local branch or the individual practitioner, then we have a much higher conversion when that borrower then looks to validate or verify who Loan Depot is in that local marketplace, because they're not just looking at a 1-800 number anymore. They're now looking at a branch manager. They're now looking at actual experts in their marketplace. So the conversion rate on that demanding, the 150% more, I love looking at this. I mean, I'm such a dork. I love looking at these stats because it's really how you should be modeling that. But speed to contact, to your point, is also super important. So if you get to them as fast as possible, and then you have a verification process, behind it, so that they can look and also be relatable to that local experience, I think you have a winning chance.
Mm-hmm.
Yeah, and forgive me, one thing I forgot to kind of delineate when I was sort of doing the intros is of course we all are familiar with Loan Depot. So Tony said number 2 non-bank, but effective inside mortgage finance stats, closing of 12 months 2018, number 10 overall. And then Mortgage Research Center, the interesting thing and the relevance to the folks in this room is that it is for the industry, right? Is that a fair
Yeah, I
characterization?
mean, we do lead generation in general for companies, kind of how they would like it done. So we have sites like Realtor, Homes, Movoto, where customers are shopping, and we want to be able to match those customers with lenders, both locally in kind of a hybrid model, both branches as well as consumer direct. So there's opportunities with those people shopping online. They're looking to get connected with a lender and a realtor and kind of like begin that process. And then we do the same thing with our own sites and search and social. How do we get those customers in those different markets and target those markets and find those people searching online? Because that's really when they're beginning that stage and like those very first steps and trying to figure things out. And when you can really start to build a relationship at that point as the leader through the process.
So couple more, we're going to zip through a few very quickly on customer expectation and then really kind of dive into some of the critical issues around all this. Oops. Wait, what? I'm sorry, guys. Okay, there we go. So these are all the Realtor.com stats. So 140 million people visit a real estate website each month. 95% now use the internet to find a home. 51% of recent buyers found the home they bought online. I think that one's pretty critical, like we're officially in a majority, right? There's some renter stats that put that in at around 72% that are not on this slide. So the renters coming downstream are already a vast majority. So we can expect that 51% to rise. You know, this stuff is crazy. This goes to our industry now becoming a lot like going and buying a car, right? Where you already know everything. You know more in the car world. You know more than the person in the showroom at this point, right? And firms like Tesla change that even more. But it's like this. Everybody knows their price range. You know, almost everybody. Also, almost everybody knows their neighborhood. To your point, there it is, right? So that's actually, I thought, encouraging. The reason I wanted to highlight this one is because when you start thinking about direct, I want to come back. I want to spend a second on this because this is from Move, right? Like, you know, who oversees one of the, you know, machines that you power.
Yeah.
So they call it an hour. So is that
Less would be better than an hour.
Yeah.
I mean, I think you're going to need
Way less.
Yeah, way less.
Way less than an hour.
I mean, ideally, you're getting that call right away in seconds. But if you're a little bit longer, you could still probably be okay if the lead is like not shared. And most purchase leads you can now start, like purchase is becoming less and less of a shared marketplace in terms of leads, and that you can buy that lead almost exclusively, versus refi tends to be a little bit more of a shared lead. But you still need to be calling that lead quickly because that's when they're available. The second they fill out that lead form, they're available at that moment, and they want to begin that conversation and figuring out like what do they qualify for, what are my options, and what can I get pre-approved, and what realtor should I work with? Like most of them don't have realtors, they don't really know the process, so they're really looking for that help kind of right away. That's why they're putting in that request.
Although there's also like that immediate speed to contact. I have a funny story. So we released this big lead pool program for our retail channel about like a year and a half ago, and it was a small group. It was like 30 people, right? And so they had these competitions going all the time, and somebody was really, really proud of themselves with a 5-hour speed to contact average rate. I'm like, 5 hours? They didn't convert one single loan, literally not one. If I can tell you about kind of like what our conversion rates look like, we buy 9 million leads roughly annually, so about like 750,000 a month. The fund rate on that, based on what we've seen traditionally for about a decade, year funding out of that 9 million, 550,000 of those, right? Like total. So the persistence and the commitment to those in a direct call center environment is going to be very different than what a retail LO is used to. So like a retail LO is not going to sit there and hammer on and bang on the phone all day long. That's not their job. That's not what they do. They're in the market, right? This is probably a lot of you guys and girls, like what your teams are used to is building those relationships and really having that dialogue. what we found success on is the speed to contact rate in direct, and then actually 90 days later when direct is like, I gave up on that one, because we still have a huge percentage, right? Like we talked about 550,000 of the 9 million. What about all of that other potential? What do we do with that? Well, let's follow up with them in 90 days.
Yeah.
When direct is done hammering on those phones, we then have an opportunity, because as you know, I think you talked about average sales experience is
Yeah,
what?
it's way longer. I'd say I think some of the people say 4.5, but that's, I would say, way
4.5
low.
months?
I would say it's closer to probably 6 to 12 months, even going on 15 months on most leads.
I've heard stats as long as 18 months in some
Yeah.
cases. So guess what? Maybe that person is ready at that moment, specifically for refi, because we've been in that experience for lead ag, but for purchase, it's changing the game. If you can follow up with them 5 months later, like, hey, remember us? I'm actually down the street. Want to meet at Starbucks? Let's do this. And they're like, oh my gosh, I just happened to find my house. Nobody else was following up with me, you know?
Can you just extend that for a second, because you also do oversee retail and the Total Expert product, and like how that comes together a little bit?
Absolutely. Some of what I was actually asking about in that active listing alert process, which is amazing that we even have the ability to monitor that. But we buy a ton of data, and we have obviously a lot of historical insight in terms of who our customers are, identifying what the trends are and patterns. It's data science. Marketing has become, and I'm glad that some people were talking about reporting, because I think that that's where we need to be. We really need to get more analytical. I was in a meeting with my organization the last couple days, and the data scientists, I'm like, I do great flyers. You're a genius. I'm like, what? You're incredible. This is crazy what you do. But we have to be that strategic and thoughtful, as you're kind of like building this all out. And so what Total Expert's been really great at is giving us access to the MLS data, which nobody else was able. There was no competing product at the time when we were looking. And I've been a customer for 3 years, and I'm obsessed with all of them. Like, Total Expert is my favorite of all the things. But like the MLS data, I think, is a game changer. Having that active listing alert, being able to also, kind of partner that with some of the other data enrichment that we're doing, and the contacts that we have, and then automating a lot of that on behalf of the LO, because they're not going to do it, so we have to do it as soon as it comes in.
And speed of lead too, like you're saying, the multiple follow-ups. Like, even if you're not getting hold of someone the first time, you need to have that follow-up strategy planned out. How are your loan officers texting? How are they emailing? And then how many additional calls are they making? Are they following up, initially in the first few days, several times, 6, 7, and then are they following up 25 days later, 50 days later with some kind of touch point to be like, hey, where are you in the process? Even on leads they're unable to get a hold of, because those leads come back around, and then usually they end up filling out another lead.
Right.
Like, most leads are going to fill out multiple leads if you're not following up.
Yeah, we did this actual, and this is a tip that I would give you guys for conversion tracking and attribution models. We started doing retargeting ads, which is awesome that we do it obviously on the direct and enterprise marketing scale for lead aggregation, but we actually brought it over for retail. So all of our retargeting that we do specifically has our loan officer's face and name and phone number and online application. And we just recently were able to finally put a campaign ID on that to convert to the online application and be able to bring back a residual value or any type of funded rate, that we got. Just in the month of January alone, we did $1.6 or $1.7 million in loan volume off of 3 or 4 leads, and it cost us $43. Like, the fact that I could, to somebody's earlier point, I think it was Trey, saying like, when we have to recruit or when we have to go out there and to our bosses and say, hey, I'm trying to be a genius like all these other great people. Here's how much I spent and here's what I brought in. It's powerful. So being able to integrate your systems in that way and having that ROI tracked, this is the time to do it. There's never been a better opportunity.
Yeah, and I had flipped the slide for those of you who were kind of following along with this, and this again is the stats that kind of say that customers This is what they want, right? So this is this clicker working? There we go. This is according to your metrics, right? In terms of, having done this and having built BU into this very large machine. And this is the stat that I think really jumps out, right? Because this flips the script on the whole thing. So if you get to the customer first, you kind of have this ability to sort of run the show for everything else. So we can spend just a moment, talking about this, because this is, is Fred still here? Is Fred in the room? So Fred, I'm going to just read this verbatim because this is something that I was talking to him about. And he said, you have to train the sales force on how to understand the customer journey and the customer expectation, which we just talked about, and build the model around that rather than trying to shoehorn customers into your existing model, right? So I just wanted to also underline that point, because the hardest thing what most of us do, we're like, well, the model's the model, but if this whole first segment is about, or if you think about what the customer wants, this is the resulting stat, right? And you can really, so I don't know if you guys have anything to add on that, but that's the most important part, and it's going to sort of lead into some of these other things that we're going to talk about, of what can you do once you have them and you have flipped that script on them.
Yeah, for sure.
So I'll leave it open for you guys to kind of comment on a couple of things if you want to sort of jump in on that and say, like, Mellow Home is predicated on the fact that you got to the customer first. The whole business model is predicated on that. That was something that we were collaborating on to create it and roll it out, right?
Yeah.
So do you want to comment on it?
Sure, I'd love to. I think that, so Mellow Home is our sister company, Loan Depot's sister company, and essentially it's a platform network that we have established. We have several thousand of the top 1% real estate agents that are involved in that. I was actually just doing some metrics with my team this week where we were looking at the number of agents that are currently in our network versus the co-marketing partners that we've invited and that have accepted our invitation on Total Expert. And those numbers, we have a ton of active network participants that are like, yeah, I want your leads all day long. Let's do this. And I'm like, yeah, let's do this. But then we don't have them connected to our marketing platform. So there's a gap, and I need to bridge that gap. And there's huge opportunities that, you don't need to have a sister company or any of this to be able to do it. You have Total Expert, luckily, to create that co-marketing opportunity. But as soon as you have that, some of the listing alerts and different things, you have to show up to be able to at least get those opportunities established and partnerships and relationships. So, in my opinion, it would be looking at your co-marketing partners and the adoption. And if we do get to a reporting dashboard at some point, who is doing an effective job at that? I have a training team that will literally focus on, we create a flyer. I hate flyers so much, but we create a flyer, we create a single property site, we create a social graphic, we create, all of the things for each of their listings when they're available and shoot that off proactively. But if you don't have them as a co-marketing partner, it's going to be more cumbersome. It's not going to be as predictive as it can be, right? So take the first step, get connected, and really make action on that. And find the people that are doing it well and use them as your champions. I can't tell you enough about championing your users and who's doing it right, because success breeds success. And people want to hear what's working. And I'm sure you guys get this question what's that guy doing? He's awesome, right? What's that girl doing? She's amazing. And if you can share that, then you're doing basically God's work to them, So it's I think just taking that first step with realtors is huge.
Yeah, and I'm gonna save your version of this segment of what's Mellow Home for everybody else in a second. Because I want to shift gears for a second to this question and just kind of get into the economics a little bit, right? Because when we talk about starting to try to integrate direct, how much do you have to, if you're starting from scratch, how much do you have to experiment with to like, when is somebody taking it seriously? Like, what's the volume of leads and or the spend, right?
Yeah, and so, I think the big part of it with that comes down to the attribution of it, like we were talking about. So
Yeah.
on a branch level, I think we see branches buying around $1,000 a month in leads, maybe 20 to 40 leads, depending on where they're buying. At a consumer direct level, you're talking probably closer to $10,000 in leads a month, getting a couple hundred leads, several hundred leads, depending on what system and what types of leads you're looking at going, and then up from there. But it is figuring out that model that works for you. And then also with the leads that you are closing, having a tracking system in place to know, hey, here are all the additional borrower referrals I'm getting. Here's all additional realtor referrals, because 80% of them don't have a realtor. If you aren't tracking those extra conversions, then the marketing cost per close looks crazy high. But if you have an idea of like, oh, actually, like Todd was saying, I'm going to go get some new customers yesterday and figure out how to get more borrower and realtor referrals off that. That's where you see people really starting to have success and bring down their costs.
And so that's really important, because it's not just as simple as the graphic here of like, well, we've all been talking about costs, and costs are up 67% from, Q1 08 to 3Q 18 per the performance report. And so some of the big debate when you look at these charts is like, okay, well, a lot of the infrastructure has gone into place, and so now the costs are, like POS, LOS, et cetera. POS, MOS. Is that cost going to start dropping now? Maybe or maybe not, because if you do need to start kind of looking at lead buying strategy, it's not. But that part is the most interesting part, is the incremental business, because we are having this conversation in a purchase context. We're not having it in a refi only context. Did you want to?
I'll say just, I actually think that one of the biggest benefits that retail has had, our retail division with working, the question, how do you run retail and direct well together? I have no idea. So I can't tell you, but I think we do a good job, like there's always room for improvement. But it's not totally like, a unified team at this point. And it really, it can be. But one of the biggest enhancements to retail is the expectation of the consumer is now, it's an expectation, it's a requirement, and retail has to get on board with it. And it's a culture change, and it's a difference in behavior for a lot of our folks to really get on board with that. Like, if you're not getting that business, somebody else is. So you have to figure out how to get there and be the first in line. But also data. Big data and data enrichment is where it's at. And even though those 9 million leads that we buy, you basically said I'm overspending, so I have to talk to some people based on your expectations.
No. Purchase and refi are different lead models.
As long as I'm buying them from you. No, I'm just kidding.
We scale up from there.
Yeah, exactly. No, but there's still that huge opportunity, right? And it's not like a missed opportunity that we didn't convert those leads. That's all data that we then have at our, as an opportunity level, I think. And retail typically doesn't have that. And LO comes over with 300 contacts, and you're hoping that like 30% of them have email addresses, but most of them don't have anything, right? Like that's what we're looking at. So if you can focus on good data and then data enrichment and plugging all those things in, I think that ultimately plays to, LO comp and, cost per fundings, cost per originations. If you can get more and more data and you can get smarter and more automated in some of this stuff with that, you can really streamline the process, streamline your expectations, your predictive behavior, predictive marketing.
One more question on that. So the lowest basis point model that I'm aware of in direct is 15 bips to the LO, right? Yeah, and I won't name names, but it's real, and there are LOs doing real volume with that. But with that said, that's at one end of the spectrum, and let's call it, 125 on the other side for like a traditional LO. So if you are doing this at scale and you're starting to, provide your retail LOs with, hey, it's this much lower in bips for the leads that we're giving to you, what do you see over 2 years, 3 years? in terms of
So interesting.
that gap is not it's not going to go over, it's not going to end here or here, but it comes to the middle, and it's like, I think it's unrealistic that it's ever below 50.
50 is around right, roughly. I think that like what we're seeing is a lot of LOs that are comfortable with a certain level of participation in this type of model. We actually have our direct channel. We have about 80 to 100 direct purchase LOs. So they're young, eager, aggressive, super, super motivated, and they will literally bang that phone all day long. On Tuesday, we did 800,000 calls. Tuesday, one day, we did 800,000 calls. These people will stay on it, they will stay after it, and that's why we can spend the money on the leads that we do, because we have that follow-up. I cannot pay somebody 200 bips to sit on the phone and make 800,000 calls in a day. That will never happen for us in retail. It just won't. It's not reality. So just figuring out how they can partner, and ultimately the most difficult part that will be the case if you try to explore this opportunity in the future and set it up, I would say, like we have 80 now. We started with 5, right? So scale it and test it and really like figure out what your sweet spot is and who those professionals will be and how they will partner and how they will receive the opportunity. But the plumbing in all of it, so that you have a direct LO who's banging on the phone, and then that person happens to be in New England, and they're looking for a home in these 3 states. Okay, well, I already know that I have this LO who is willing and able and available today to pick up that lead, and I need a telephony strategy that will automatically jump ball them, and they can pick up the phone and the lead's right on there, a concierge person to connect them to, then I transfer them to my Mellow Home partner so that I can refer it to a realtor. So the plumbing in that is very sophisticated, and it is definitely an investment. I think Total Expert offers the tools that we need to bridge that gap in many circumstances. But a lot of it's going to be back end as well, so that you got a slide about visibility and expectations for the consumer. They want to see what's going on. They want to see who they're working with. They want to know where they're at every step in the game. So some of that is a little bit further along in some ways versus others, but that's how they can work well together. We're not perfect. We're still figuring it out.
So, and on that note, let's shift it to what it means for everybody, right? So I'm going to have Alex kind of talk through some of these things, with respect to, obviously, we can dive in a little bit more to Marketing OS and what that means and what the functionality needs to be. Do you want to say a word on Mellow Home for everybody else, what that means and how that model works?
Yeah, so similarly, if you do have somebody at 50 basis points on the online leads, one, if you are expanding into a new region and working with new leads, while that loan was at a lower spot and maybe you're charging lower basis points, we see people all the time, they charge a certain basis point for your online leads, but then you're getting later on lots of borrower referrals back up at that higher level, which is how we've seen a lot of people sell their teams on it. Is like, okay, these leads are going to be less, but how do you actually do that expansion is definitely tough. And we were talking 80% of the leads we see don't have a realtor. So it's up to those teams to really take ownership of those leads. And it's a way to really either play offense and figure out new regions you want to go and have pre-approved customers to offer to agents, or in your own area, be able to supply agents a lot more pre-approved customers. We've even built a sister organization as well, Alliance Realty Network, for any lender to be able to plug in, because we've seen that, I want to say about, if you don't have an agent in the area, you're just going to lose deals, right? Like the agent's going to give it to somebody else. So you can plug into an Alliance agent and they're going to work with you. They're going to be able to work with that process. We really built that because we saw the drop-off in conversion was just so high and made working online leads tough. The other piece that we saw was kind of between a direct and retail, there's going to be a little overlap. And I think the branches typically think they're the losing party, but we found actually like they're typically the winning party.
And we're going to do that,
Okay,
a little bit more.
that's separate.
That's the next one, you know.
Okay.
So, but let's, because I want this one to sink in for folks that aren't following as closely on this concept, because it's part of it's on the slide and part of it's not. you have to have vetted realtors outside of your core geography if you're doing that. And then you're like, okay, but how does that work and what's up with RESPA? And it's just not complicated. There's several companies that are doing this and they're still kind of flying under the radar. But basically they will take the brokerage referral fee from the realtor to say, hey, you come into our platform, we will provide you with lender leads, but you will respond to those, and we will score you, and we will kick you out if you are not performing.
Yeah,
absolutely.
Right?
Alliance is totally free, right?
Yeah,
They have their own
That's,
revenue.
so it's
you can
free to the lender.
So the lender
like
Alliance is
all
totally
these
free.
models are free to the lender because it's not you're like sitting here. Okay, great. You're talking to me about realtor portals, and that's just another cost I got to deal with. No. And that's what's exciting about it.
Yeah,
right?
Alliance is totally free because they're
Yeah.
making their money off of the referral. So what they're really looking to do is try to just create as many deals as possible and help their lender partners close as many deals. And so they just are taking in referrals and offering that up so that you can have an agent in that area and can kind of expand into new markets and then create your own relationships. Like, we understand that's going to happen. And like, that's
Yeah.
kind of the point is how can you go find some quality agents in those areas, get closes in new markets, and be able to then get those referrals start coming in after you're able to do some actual business in that area.
And here's the other cool part about this, along with Alliance and a few others that are out there, Home Captain, Homebird. There's a short list of ones that are really, really good. If anyone has questions on that, you can feel free to ask me, and I'm happy to help. But they also will provide some of the technological infrastructure that isn't in tier one in part one here yet with the marketing OS, right? So that's the other thing when we talk plumbing. These companies are getting sophisticated. It's quiet. It's just like what MRC is doing. It's quiet, but it's real and it's happening. It's available now, and it doesn't cost lenders anything. That's what's really, really interesting to me about that part. That's the thing I'm kind of most intrigued about this whole evolution right now, right? And then the third segment on this, of course, is just we talked a little bit about triggers in one of the breakouts yesterday, but I just kind of want to run down the list and see if you guys have any reactions to this because I want to save time for the last segment, which is about attribution, right? But obviously, credit watch for score changes, debt watch for triggers on credit card balance thresholds, listing watch for listing activity, equity watch using AVMs to monitor value, competitive watch to monitor loan inquiries, rate watch is not just for refis, but you can pair it with equity for other ops. And then loan loss, how many leads and prospects went to somebody else, name of lender, loan program, et cetera. So you can actually really get into this. Life events watch. And then, of course, like the real-time bad decision watch is just, my phrase for it of like, you can get an immediate real-time notification of like somebody's, trying to buy a car and you're like right in the middle of it with them and their DTI is like, going to tip over, and you can get to them on that stuff. So, just quick comment or two on that because I do want to save some time for the last segment.
I'll say that we're doing some level of that for retail. Direct is certainly way more focused on that type of strategy. We do what we call in the market alerts, so like our credit triggers. A great company to look at if you've been out there is Data Mix. They actually stratify like all of our databases and will credit monitor with all three bureaus and bring that back and integrate into our CRM to provide that listing alert, or sorry, the credit alert. Some of the things that we're looking at, and I mentioned quite a few times, is the listing alerts, property listing alerts. So we're really trying to connect that. Just because I think that listing agents is where it's at, right? Like there are peeps. We need to be all over them, and we need millions of them. Well, there's 1.2 million of them, roughly, and we need to be all over it. So I think that the biggest thing I struggle with, and you're going to talk about this next, I think, attribution-wise, is having RLOs respond, speed to contact, right, as soon as it comes in, because every other bank and lender is also doing the same thing we're doing. What makes you special? It makes you special if you've worked with the person before and they know you and you already have that relationship established. And the faster you get to them and contact them and give them, the best service, the better chance that you have to convert that at any level. But then I need them to disposition it and tell me that it came from this campaign, because otherwise I have no idea. So I struggle with that part still, unless it's totally and 100% automated. I recommend using the lead sources that you have in Total Expert through your property sites and different things so that you can track campaign IDs. As I was mentioning earlier with like retargeting ads, placing that all the way through the campaigns to conversion on your online application so you can actually see the efforts that are converting in a way that is, you can provide as ROI.
So, okay, let's keep moving. Channel conflict. The real name for it is attribution,
Yeah.
right? It's not so much channel conflict as it is, from Alex's perspective, attribution. So just like a quick couple of notes on what that means, and also, if we're talking about marketing being a revenue center, does marketing get credit for, because you've got retail direct, and then of course you have marketing itself.
Yes.
Right? So can you just kind of...
Yeah, I mean, I remember we had a model previous role where we had our branches and they would get some leads and the consumer direct would get most of the leads. But what the branches always thought was the consumer direct was taking their leads. Somehow they were going to get their leads and they weren't going to get them back, or they owned those leads for a certain amount of time too. But what we actually found was 40% of the leads that came through the online site that we thought was going to go consumer direct, they ended up going with the branch anyway. So like 40% of the branch's closings came from leads that went through the corporate site because there are people who were like filled out a lead on Zillow, and then they go search the brand, and then they find the local location, and then they go into the local branch. And so you see a lot of that crossover, and you're going to get a lot more closes through those kinds of mechanisms where you're not even getting credit necessarily for that lead, depending on how it's moving around. The other thing would be nurture campaigns and like, yeah.
Well, this goes to Kristen's point before, which is like, okay, if you really sliced into those numbers that you count annually, there's still, if you say that the purchase cycle is much longer, yes, you have to kind of count a conversion rate annually, but there's certain ones that are still maybe in a nurture, if you're getting good at this, that are moving into the next annual, like
12 to 18 months.
Yeah.
I mean, you can't track that on a minute-to-minute basis. So I think, the whole thing that we deal with is like, you're putting a 1-800 number on our marketing materials, like put my cell phone number, make sure it's my face, make sure it's, like I'm all over it, like this is my brand, it's my, I would just recommend to make sure that is possible, that you have reputation management under control, because that is what exactly you're talking about, is basically the person is oversaturated with marketing efforts and a lot of attention from all these competing shared, lead aggregators. And then they're like, I don't know, let me just check and see what's up. And they go and they Google it. And if you don't have a Google My Business listing, and you don't have a Facebook page, and you don't have a Zillow site, and you don't have all the things that they're gonna be finding on there set up for every single one of your branches, not every one of your LOs, but at least minimum Google My Business listings, Zillow pages, Yelp for sure to an extent. But if you don't have that, then it's so much more difficult to get that conversion rate to retail.
Even on denied customers. I mean, we used to, on customers who initially are denied on credit, I think at this point, the previous role, we would close about 10% of that. Our closings came from people who we initially denied. So like you can monitor their credit, and if anything, do coaching. There's programs out there that can do some of that. And if they're close on credit, they can get to that point where you can actually do significant volume of customers who you're initially denying.